the panel, the discussion, an objective and impartial view of the issues of interest to you. Nation Beat is on now.
Hello and welcome to Nation Beat, a production of the National Television Network. Today we explore some of the provisions under St. Lucia's anti-money laundering, counter-terrorism financing legislation. My esteemed panel will discuss I'll name a few of the issues they'll discuss, the pivotal work of the National Anti-Money Laundering Oversight Committee, NAMLOC, and mitigating risk for customer due diligence. And you'll want to pay attention to customer due diligence. So welcome panel. It's a conversation we're going to have. I'm going to ask you to tell me a little bit about who you are. So first we have Ms. Juliana Alfred. Tell us more about yourself.
Good morning, Mr. Simon. My name is Juliana Alfred, and I am currently the Permanent Secretary at the Attorney General's Chambers. But specifically for today, I am the chairperson of the Anti-Money Laundering Committee.
And there's a lot that you're going to tell us about
absolutely,
that.
Absolutely.
So next to you, I see we have Levi, a very interesting name. Tell us about yourself. Tell me your full name and tell me about yourself.
Okay, pleasant good day. So I am Levi Burton-Mark. I am a Deputy Director at the Eastern Caribbean Central Bank within the Financial Sector Supervision Department. I'm also head of the Anti-Money Laundering Supervisory Unit at the ECCB.
You have more? That's a lot already.
Quite a bit. It is quite a responsibility that we have, and we take it very seriously.
Excellent. We'd love to hear what you bring to the table in terms of NAMLOC. And we have a returning guest. It's Astrid Augustine.
Hi,
tell us about
good
yourself.
Day. Astrid Augustine. I am from the Supervision Unit of the Financial Intelligence Authority.
Okay, you keeping it that short. I know you have a lot to say later on. And last panelist, Ms. Safia Montrose.
That's correct.
I said it correctly?
That's correct, yes.
Tell me about yourself.
I am Safia Montrose. I am the Governance and Risk Manager for Nagico Insurance, OECS Territories.
All right. So now we hear this acronym, NAMLOC. It sounds like an intimidating acronym already. What is NAMLOC? What is the National Anti-Money Laundering Oversight Committee? What is that about?
Essentially, this is a committee that was established by the Cabinet of Ministers to ensure that there was a coordinating mechanism to provide support in relation to our AML, and I'm sorry, I'm using a lot of acronyms, so our anti-money laundering efforts in St. Lucia. And this committee is cross-cutting. It consists of a number of representatives from various local organizations and also a regional organization in the representative of the ECCB. So our mandate is essentially to monitor the landscape, ensure that there's adherence to our commitments to CFATF, ensure that there's continual awareness of the AML framework, and most importantly, to work with our partners in the public and private sector in terms of addressing any deficiencies that we have identified.
So, in terms of anti-money laundering, for persons who are hearing this for the first time, what is this? Tell us a little bit about what anti-money laundering is and what is its importance to an entity like NAMLOC and the government of St. Lucia. Why is anti-money laundering an issue?
Okay, so to understand the concept of anti-money laundering, one must first understand what is money laundering.
Yes.
Now, money laundering is proceeds from illicit activity or criminal activity, which persons would want to get into the formal financial system and give it the disguise that it is derived from a legitimate source. The purpose of anti-money laundering is to institute controls to then mitigate against the risk of money laundering. And indeed, while we are mentioning money laundering, we also have terrorist financing.
Yes.
And most recently, the Financial Action Task Force would have added proliferation financing as well. And so the role of NAMLOC is to ensure that we do have regulations, controls, and legislation that would mitigate against the threats of money laundering, terrorist financing, and proliferation financing.
Wow, that is an important role, because I think how important is it in terms of, I come from the productivity unit, we deal with competitiveness issues and productivity issues. Is it that this legislation is going to assist St. Lucia in continuing to be productive and competitive? Any one of you?
If I may, Glenn, and I think that one is very interesting. When you talk about ease of doing business, let's break it down to something as basic as the use of your credit card. as a consumer if you're not able to use your credit card in St. Lucia because we have found to be wanting in terms of our AML practices. That is significant for a customer. So I want to say that it is very important to ensure that as a country we adhere to the international obligations. And I want to stress that these are in fact commitments that St. Lucia would have undertaken a couple of years ago. And so while it may seem, and we have gotten quite a bit of criticism in relation to the pressure from the National Anti-Money Laundering Committee trying to force changes in legislation, but that's not accurate. We are trying to ensure that we meet our international obligations. We are trying to ensure that St. Lucia doesn't end up on a gray list or a black list. We are trying to ensure that consumers in St. Lucia will always be able to use their credit cards and there's no possible threat of the loss of correspondent banking. So it's very critical, and so the work will continue as we have been doing over the last few years.
But it seems like we're always going to be fighting every year to try to meet a standard because the standards change. Now I see that we have that St. Lucia would have to undergo a mutual evaluation, or they did a mutual evaluation in 2020. One of the key components of the mutual evaluation is the National Risk Assessment. What is that? Explain what the National Risk Assessment is all about, the objectives, how is the public and private sector stakeholders, how are they engaged in the process? What is the NRA all about?
All right, so let me start with the mutual evaluation. We did undergo a mutual evaluation and a report. It was actually the 4th round mutual evaluation, and that report would have been published in 2021. Out of that report, St. Lucia would have been found wanting in a number of areas. And so over the last few years, the NAMLOC has worked assiduously with our public and private sector partners to ensure that we're able to address those deficiencies. I'm happy to report that we sought review for 27 of these recommendations, and St. Lucia is currently compliant or largely compliant with 35 out of 40 of these recommendations. So the team has done tremendous work in terms of us getting to that stage. Now, as part of the mutual evaluation process, one of the recommendations is that you must, or you should, it's advisable that you should undertake a national risk assessment. A national risk assessment essentially is just a snapshot in time of where the country is at in terms of its risk to AML, CFT, PF, some of which Livia would have identified. And for us, importantly, when we undertake that process, we are able then to put mitigation measures in place so that we can reduce the threats and the vulnerabilities to these elements. I know it's highly technical, but I also like to use the example that when we talk about threats to AML, you can look at, for example, a potential burglar outside your house as being a threat. That's a threat. When we talk about vulnerabilities, we talk about your house maybe not having an alarm system or your windows being damaged, and so it's easy for that burglar to get into your house. So essentially, when we do that national risk assessment, we are assessing where the country is at. What are the gaps? What do we need to fix within the public sector, but also within the private sector as well?
So you mentioned private sector, now to bring Safia in. You're from the insurance sector.
That's correct.
How has all those regulations, all those improvements, all those legislative changes been for the insurance sector?
I would be honest to say that it has been somewhat of a burden when you look at customer service and the pushback that we get from some of our clients. However, it is very important to ensure that we assess the risk which is in front of us, assess the risk for the industry. That is most important. Once you have assessed the risk which is prone to the industry or the company, then you can see what internal controls you then have to implement to mitigate those risks. So for example, when a customer comes in front of you, it is important that you assess the risk, but it is also important that you make the whole transaction less intimidating when it comes to the requirements for AML, CTF, and proliferation financing. So basically, customer due diligence. So this is the most important. This is where we start with at least obtaining information about the customer. So what it is that CDD, or customer due diligence, we try to ensure that we actually know the person who is in front of us and who is doing business with us. So there are different levels of customer due diligence. However, we as an insurance company, we have to train the employees to know exactly what information is relevant for the customer and the risk which is in front of us. We also have to try to be innovative in our forms, how we capture customer information, how we share and how we reuse customer information. So therefore, you find when you have a customer and you have a form, there are multiple forms when it comes to AML, CTF, and different requirements for compliance. We try our best if we can capture all this information in one form, one central form. It is also important that we have efficient data information retrieval methods. So for example, we can make sure insurance, we have repeat customers, and in insurance we have customers who would like to take insurance in different lines of business. So therefore, when one customer comes for a motor policy and then they come back next year, for example, for a property policy, we're not asking them for the information all over again. We have a easy retrieval backup system, data system, where we can say, okay, Mr. John, you were here for your motor policy last year, you come for your property renewal this year, we already have all of your information right here. I mean, these are the requirements needed, but easy access for the customer makes it the experience all the better, and it also makes enforcing the AML, CTF, and CPF requirements much easier for the company.
You say that's so easy, but that's not what every customer says. I guess that's from company to company, depending on what policy, because sometimes they ask you for the same information over and over, even when you go for a loan in the same bank.
Yeah, the same bank, yes.
Yes, so
it's also important that you have your management team, your board of directors, your executive on board with something called funding. So to have these things in one place, so retrievable, it is a costly initiative. So we have to make sure that the people above us, above the customer service representative, are going to offer the funding, for example, to have those systems in place.
Yeah, I think it's important for the customer experience, as you said,
even
though you're observing all the rules and regulations. So let me bring Astrid in before the end of the first break. How is the Financial Intelligence Authority involved in ensuring that this legislation is effective? What is your role, the role that you play?
So at the Financial Intelligence Authority, we have the supervision unit, and we are responsible for ensuring that entities like the insurance companies meet their obligations in relation to the mitigating measures that they or the controls that they're supposed to implement to prevent their institutions from being used for money laundering and other financial crime. So we, the legislation sets certain obligations. Our role in the supervision unit is to ensure that these entities meet their obligations, they satisfy their obligations. We need to communicate these obligations to them, give them the correct interpretation of those obligations and the legislation. We would assess what they've done occasionally to see whether they are complying with their obligation to put those measures in place, those controls in place.
So there's a lot that happens with ensuring that there's proper monitoring of the system and enforcement. But we'll get into more of that monitoring and the role of the ECCB and others when we come back. So we take a break. When we come back, we'll delve deeper into the St. Lucia's anti-money laundering legislation.
Listen, I am fed up. You're just asking for more information, more information, more information. What is that all about? You know me, Gassa. I do business all the time.
I'm sorry for the inconvenience, sir. But let me explain to you why we request additional information.
More information, Manita.
So every year, $2 trillion is laundered through legitimate institutions like this bank.
What that have to do with me?
This laundered money is used to support criminal activity and terrorist activity, and also to finance weapons for mass destruction.
But what that have to do with me putting my money into my account?
Well, because of money laundering, our bank, your bank, is obligated to comply with the International Anti-Money Laundering Regulation.
What's that?
By performing customer due diligence. Essentially just knowing our customers a little better.
You know me.
Your banking patterns and transactions. It's a relationship, and if we fail to comply, the penalties will be severe. Not just for this bank, but for St. Lucia.
If we?
Yes.
I never realized that.
But what's good is that we have an oversight body called NAMLOC.
What's NAMLOC?
The National Anti-Money Laundering Committee. It monitors St. Lucia's compliance with international regulations. The aim is to nip money laundering at its source. You know the old saying, si la pani city wears.
La pani vole.
For further information, contact the Attorney General's Chambers at 468-3200 or visit the National Anti-Money Laundering SLU Facebook page. Welcome back. So we've been discussing St. Lucia's AML, CFL, anti-money laundering, counter financing of terrorism
and proliferation.
And proliferation. So it's a lot that has been you're monitoring. And it's all under this oversight committee, NAMLOC, and there are a number of provisions and a number of stakeholders. One of them critical is the ECCB. So tell me, one of the issues that have faced many citizens in St. Lucia has been the ease of accessing financial services. What role does ECCB play in improving access to financial services? And that's all based on all the legislation that has been put in place.
Indeed. So similar to what Astrid would have indicated, the ECCB does have a responsibility for supervision of its licensed financial institutions under the Banking Act. And so that responsibility includes ensuring that there is compliance to the relevant AML-CFT legislation. But part of that responsibility of the ECCB is also the matter of financial stability, which will take into consideration financial inclusion. Now, when we speak of financial inclusion, we want to ensure that there are access to financial services that are affordable to the persons and our citizens within St. Lucia. So financial inclusion speaks of accessibility, affordability, and responsibility, and these are all key factors when we think about financial inclusion. The ECCB is not the only authority. So while we are responsible for ensuring that there is a framework, we also have our government who's also responsible for ensuring that financial inclusion, the infrastructure to facilitate that, is also possible and present within the country so that persons can access financial services. Beyond this, we have other stakeholders, and that would include the financial institutions. And so they too must ensure there are products and services that can make it easier for persons to do business. And I would like to just lean in on what Safia would have indicated. So they have now instituted a customer due diligence framework. They have had a central point, a repository of information. So when I come in now and I need to renew my policy, the ease of getting that information or even offering me new products and services, it's much easier for me to do business. And all of this forms part of a financial inclusion initiative. It should be easier for us to have access. It should be affordable. And I want to make a very good point that it needs to be affordable. We cannot be pricing persons out of the system, which then makes them go to look for other nefarious places to get those financial services. That in itself presents a risk to the financial system.
Now, you talk about financial inclusion. Is that similar to financial exclusion as well, persons who are unbanked? And if so, what is the risk of somebody who doesn't want to utilize the financial system to the AML policy? And if you could answer, but what is the risk? I'll start with you first.
Okay, so financial exclusion and unbanked, they're all intertwined. Financial exclusion simply means that these persons do not have access to the formal financial sector, and for various reasons. They cannot afford to, or accessibility is simply difficult for them to get. Or they choose not to. Yeah. And it is similar for the unbanked as well. These are persons who do not hold an account within the formal financial sector. What is the risk? There is a significant risk to the individual, that being I mean, we live in a global economy. We live in where we have to interact with each other. We have to purchase goods. We have to interact on a day-to-day basis. And so if you're not utilizing the products and services where there are regulations governing that, it does expose you as a consumer to being abused or to what we call predatory practices by persons, which might indeed be more expensive for that consumer. And so this is why we encourage and we advocate for financial inclusion. We advocate for our citizens to participate within the formal financial sector, because this is where we, not as regulators, as your government as well, can protect you as a citizen.
So persons who are unbanked normally deal with fiat currency. They normally just deal with cash. So the exposure there would be that you have a lot of money circulating and you don't have a proper check on what is happening. Is that part of what is it that you need to monitor? Because I'm trying to assess what is the full impact on or the risk in terms of anti-money laundering. Somebody who chooses, they don't trust the banks or they don't want to have, right now your money makes very little interest in the banks. So they may decide they put it under their bed. What is the inherent risk? Is it that you cannot monitor properly?
It's beyond monitoring. So as the Permanent Secretary would have indicated, when we conduct a national risk assessment, the main purpose of this is towards identification of our vulnerabilities and our threats. Now, outside of the formal sector, you cannot identify those risks. And so it's important for us to understand so that we can ensure that there are mechanisms in place for mitigating the risk. But beyond that, if we look at it on a personal level, it is a risk to you, Glenn, having that money under your mattress. And I guess before we finish here, you could tell me where you live so I could know where I can get the money. But fundamentally, it presents a risk to you as a consumer. Beyond that, when we speak about consumer protection, it does not afford that responsibility or that accountability with the powers that be to assist you as a customer as well. So you are disadvantaging yourself by not participating within the formal financial sector.
Excellent. So financial, the FIA, Financial Intelligence Authority.
Yes.
There's something called the supervised entities. Tell us more about that. What are supervised entities, and which entities are considered as supervised entities under the Act?
Okay, so the Supervised Entities Act is recent legislation enacted in 2023. And what it does is it makes it a requirement for operators in certain sectors in St. Lucia to register with the Financial Intelligence Authority. These sectors, we refer to them in the money laundering legislation as other business activities, but internationally they were referred to as designated non-financial businesses and professions. And the reason they're not fine, when we talk about money laundering, everybody thinks of the banks, the credit unions, the insurance companies, because these are financial institutions. We know that's where financial crime can take place, where they're vulnerable for financial crime. But we don't think about those other business activities. That's why the other comes in, because they're not financial institutions.
So tell me about the other.
So the other business activities that we don't think about are your accountants when they perform certain types of, when they offer certain types of services, your attorneys as well, when they offer services in relation to managing companies, purchasing real estate. You also have high retailers that offer products that have assets that have a high value. So your dealers in precious metals and stones, or your jewelers, we call them casually. You also have your car dealers. That's one of the highest assets, that's the most valuable assets apart from your home that a person will acquire in their lifetime, possibly. And another sector that is vulnerable to money laundering is the real estate sector, because they participate in allowing persons to buy and sell property. So the Registration of Supervised Entities Act was enacted requiring those persons operating in those sectors to register with the Financial Intelligence Authority as the authority that supervises the other business activities in St. Lucia.
Everybody else is included. So PS, I think we had, I saw you on a news item recently, you talked about NPOs. They're also involved, and NPOs, really non-profit organizations. Everybody's being monitored because there are gaps and opportunities for persons to take advantage. That's what you're indicating?
Yeah.
Essentially, yes. So I'm glad that you introduced the NPO. Currently, before Parliament, we do have the Non-Governmental Act before Parliament. It's done a first reading. It hasn't gone through all the stages as yet. I want to indicate that this piece of legislation would have been a piece of legislation that's been around for a little while. I recall it when I was at the Ministry of Equity, PS at the time. And we had, as part of our mutual evaluation, when they looked at that piece of legislation, they noted some significant gaps in it. One being that we had omitted faith-based organizations as part of that definition of NPOs.
Let's get it clear what faith-based organizations are. Churches.
Faith-based organizations. We had excluded them. And I want to say that was documented in the report, the international report, as it relates to St. Lucia. And it was identified as a deficiency that St. Lucia had to address. And so over the past couple of years, we've done quite a bit of consultation in collaboration with the Ministry of Equity. So just get persons to understand what are the changes that are being proposed as part of this legislation. We need to understand, very importantly, Glenn, that not all NPOs fit a FATF definition. So when you look at a FATF definition of NPOs, you look at NPOs that are raising, disbursing funds for educational purposes, religious purposes, etc. However, we've been talking all morning about using a risk-based approach. In doing that risk-based approach, you have to look at the NPOs that fit the profile. So you have to look at the complexity of the NPO. You have to look at the resources that it's generating. You have to look at where it has contacts. So and from my recollection, there were many NPOs that were listed with equity that are not necessarily functioning, that would not be factored as part of the FATF definition. I want to say very importantly, the intention behind the legislation is to ensure that these types of nonprofits are not used in any way for criminal activity. It is not to stifle the work of the NPO sector. That is not the intention. It is to ensure that we adhere to our international obligation.
And I can see why that's important, because you have many organizations just coming up and you're not quite sure how they constituted, where they're getting the funding from, and that is an area they will use bank accounts and use everything else. So we go due for another break, and just hold your thought. When you come back, we'll come back to you. But we're also going to be discussing customer due diligence and going into what are the two other aspects of customer due diligence I really want you to get into. The simplified due diligence and enhanced due diligence. And I know many politicians are afraid of that area. So that'll be for you to simplify for them. So when we come back, we go into those areas as we continue our discussion on St. Lucia's national anti-money laundering legislation.
What is money laundering? Money laundering is the concealment of the origins of illegally obtained money, typically by means of transfers involving financial institutions or legitimate businesses. There are 3 steps in the process of money laundering. 1. Placement. This is the movement of illegitimately obtained cash from its source into circulation through financial institutions. 2. Layering. This is the act of concealing the source of that money using a series of complex transactions and bookkeeping tricks. 3. Integration. This is the movement of previously laundered money into the economy, mainly through the financial institutions, and thus such monies appear to be normal business earnings. What is terrorist financing? Terrorist financing provides funds for terrorist activity. It may involve funds raised from legitimate sources such as donations, profits from businesses and charitable organizations, as well as from criminal sources such as the drug trade, the smuggling of weapons, fraud, kidnapping, and extortion. There is an interrelation between terrorist financing and proliferation financing, which is the act of providing funds or financial services used in the acquisition, manufacture, or transport of weapons of mass destruction. How does money laundering and terrorist financing affect St. Lucia? St. Lucia can lose its reputation and international credibility. More violent and organized crimes and corruption. Penalties for the financial sector and loss of correspondent banking. St. Lucia will be evaluated in 2019 with respect to its money laundering and terrorist financing regimes. How can you help? Get involved. Learn about the threat that money laundering and terrorist financing pose to St. Lucia, and cooperate with financial and non-financial institutions when information is requested. Money laundering and terrorist financing are crimes with penalties of up to $1 million and imprisonment of up to 10 years or both. A message brought to you by the National Anti-Money Laundering Oversight Committee and the Attorney General's Chambers.
Hello and welcome back. We're discussing St. Lucia's national anti-money laundering legislation and the body which is doing the oversight, which is NAMLOC, the National Anti-Money Laundering Oversight Committee. So we have a new panelist, and her name is Albina Maida. And Albina, tell us about yourself before we commence.
Okay, I'm from the St. Lucia Workers Credit Union, and I've been with them for the past 3 years.
But you've been in the sector for a long time?
Yes, the financial services sector for quite a long time. In the risk industry for about 8 years now. So
there was a question that I did ask Safia that she exited, but you now, the expert in that area. So she spoke about customer due diligence, but there's a simplified due diligence or customer due diligence, and there's the enhanced. What is the difference? And who would be the ones that the persons or the individuals or the companies that you would do enhanced due diligence on, and why?
Okay. To begin with, customer due diligence, or CDD as we call it, is the standard process for all persons. Now with us credit unions, we refer to our customers as members, so I will refer to them as members. So it is standard for every individual, whether you're coming to join us for the first time or whether you're existing. And SDD, which is simplified due diligence, and EDD, enhanced due diligence, are variations of that due diligence process. SDD, as I mentioned, is applied to lower risk members or persons who present a lower risk of money laundering, terrorism financing, proliferation financing to the institution. Let me just give you an example. Somebody who's salaried, for example, a teacher who's getting a salary from government monthly, the same amount monthly. The monies are coming through the bank and into our credit union monthly, and these are the only transactions on their account. We would consider these people as lower risk. Yeah. So for these persons, we will request reduced verification documents, whereas with EDD, enhanced due diligence, these are applied to higher risk individuals. Persons, for example, from our context, persons like politically exposed persons, persons who are involved in cash-intensive businesses. These people would be considered as higher risk and would apply a due diligence process that goes beyond SDD. So
they'd have to disclose things like the source of funds and everything else, and have to prove it?
Source of wealth and all of that. Source of wealth, they could declare that or provide documentation in the form of a job letter, or if they're involved in cash-intensive businesses, in the form of their registration documents. They have to disclose the nature of their self-employment and all of these things. But SDD speaks for itself, quite simple.
So one more question for you before I move to the panelists. How do you see these regulatory changes, how have they impacted your sector in terms of all the changes and the governance changes that has to happen? Has there been an impact, a positive impact? What has been the impact?
Positive and I wouldn't say negative, but challenging impact. Challenging in terms of the cost, because with any change, there is stricter internal controls that must be applied. There must be probably new investments, and all of these cost money, especially for us smaller credit unions who cannot compete with the larger banks for resources. So it has been a challenge in that area. As it relates to the positives, it helps us to remain adherent with international laws and other regulatory requirements. And if we are compliant, then of course there will be more public trust, and persons will be more inclined to join our credit union or to be part of our financial system.
What has been some of the pushback that you've been getting as a committee? Let me not go to PS yet, Levi, because you're on the committee as well. What has been some of the pushback that you've been getting? Has it been persons are willing to comply? I know there have been many legislative changes. How has it been so far?
Generally, I would have to say persons are willing to comply. At the end of the day, all of our financial institutions want to be and aim to be compliant financial entities, particularly when we look at our correspondence and safeguarding our correspondent banking relationships. But if I may lean in with what Albina would have just shared, there is pushback because of the cost it brings to those financial institutions. And so when we speak about mitigating measures, the bottom line is not always seen. It's seen as a hit to the bottom line and reduction of profitability for those entities. And they do have an obligation to their shareholders as well. And even us, many of us are members of credit unions, and we too want to see those dividends credited at the end of the year. And so it does impact them in that regard from a cost perspective. But we've often said, as a supervisory body, the cost of non-compliance is perhaps greater. You have your reputation that you want to safeguard as a financial institution, as well as your fitness and probity for those persons who serve in senior positions and as directors on the boards as well.
So I think the cost of doing nothing is more costly than acting out. So PS, let me let you join in. Tell us some of the legislative changes that has happened, because though you've come out and we've seen some of the news items, but just indicate to us some of the major changes that have happened to help bring St. Lucia up to the mark where we've been so successful at getting through a number of our regulations that have been imposed on us, that we've been successful at ensuring that we're on top of our game.
Thank you, Glenn. I want to start off just to respond to your question to Levi, to say that I have to admit that we have had in St. Lucia tremendous political will in terms of pushing the legislation, and that's important because NAMLOC can propose to change 1,000,001 pieces of legislation. If there isn't political will to ensure that it happens, it won't happen. And so over the last couple of years, we've been able to do significant changes in terms of the Money Laundering Prevention Act, proceeds of crime. We also would have introduced the virtual assets that you were familiar with. And we're working now on the NGO. It's quite a suite of legislation that we have had to do amendments to ensure that we were able to address our deficiencies. But I also want to point out that amending the legislation is not all that's required. As part of our 5th round assessment, which is just around the corner, St. Lucia will be assessed in terms of how effective it is in terms of the implementation of that legislation. Yes, it's all wonderful to say that we have passed it, we've done very well, but how effective are we in ensuring that our systems on the ground are matching what we did in terms of the legislation?
Monitoring aspect, because we're very good at proposing legislation. We have a lot of legislation in our books. The implementation and the monitoring is where we fail. And so Financial Intelligence Authority, that's one of the areas that I know that they help with that sort of supervision as well. So you mentioned the supervised entities earlier, but what are some of the potential consequences for supervised entities if they fail to comply with the registration requirements under the Act? And I guess you could tell us what are some of the registration requirements as well.
The registration for supervised entities, it's very simple. There are a few elements involved. So there's a registration form which needs to be completed. There are certain supporting documents which would need to be supplied to the team so that they can assess and process the application. Depending on the sector, you would need to, you'd have variants. So the attorneys would, for example, need to give us a copy of their practicing certificate. But the other sectors, there would be no equivalent to that. So we have various supporting documents, including identification documents, because we want to know who certain senior persons in those entities are, your beneficial owners, the directors, also who's working in the compliance function of those entities. They need to submit a copy of the compliance manual. A compliance manual is a documentation of the policies that they have implemented in their business. So it would say how they conduct their customer due diligence, how they keep records, all of these things, how they report suspicious activities. And these are all the obligations that they need to meet under the money laundering legislation. So we would need to assess whether their compliance manual is suitable. Then, so we would process that. They can submit the application via email. The registration process is also subject to a registration fee. It varies from $300 to $500. That could be paid at any of the government treasury counters across the island.
Is this annual or?
It is subject to annual renewal, that's correct. And upon satisfaction of all the requirements for registration, we would issue them with a certificate of registration.
What are the penalties for not? So you said it's simple, but this is a lot. So you want me to do a manual, you want me to do everything, I have to get consultants. So I choose not to do this because I'm running a small business and I feel I'm not exposed. What are the penalties that I could face?
So there's two elements to this. So the requirement to register is legislated now. So failure to register with the Financial Intelligence Authority is actually an offense under the Act. And there's a financial penalty to that if you continue to operate, offering the services that I mentioned earlier without being registered with the Financial Intelligence Authority. And that is a penalty up to $25,000 plus $300 a day for every day that you continue to not be registered. So that is just for registering. However, remember, those entities, those sectors have obligations under the Money Laundering Prevention Act to conduct customer due diligence like the credit unions do. They have obligations to keep records, relevant records of the transactions of the customers and other obligations, which are numerous. So there are also penalties in the Money Laundering Prevention Act for not keeping those obligations. So yes.
So I cannot even do my business on the rock somewhere.
No. We'll find you.
Oh my God.
The cost of non-compliance.
Yes, cost of non-compliance. So you mentioned all of this mentioned, and you now within the credit union sector. What amount of training is done? Is there training that you have to do, constant training, because the rules change, the obligations have changed? Do you find yourself constantly having to be updated and update your staff that way? Constantly.
Because as new legislation are rolled up, we have to, our training must reflect the changes. And also we must train, we have to train our frontline staff so that they are able to educate the members as they interact with them. We have to have training in place for the board and committee members. We have committee members in the credit unions so that they themselves will know their roles as it relates to governance and accountability and also the new regulatory requirements. So we have to remain abreast with those new regulations and legislations constantly. But FIA does a wonderful job by sending out circulars to us to break down the legislation for us ahead of it passing or ahead of it being published. So we do get quite a lot of assistance from FIA.
Does NAMLOC provide training to all stakeholders as a result? I know that you've invited myself even to some of the sections where you're looking at how you're improving the legislation based on what is the new requirements. But do you offer training as well?
Oh, absolutely. Whether as a collective, NAMLOC would facilitate persons and agencies, whether it's public and private, to access training opportunities. But importantly as well, our respective members within NAMLOC also have pretty extensive training programs. So FIA would have been mentioned. I know ECCB is pretty intense in terms of the training. So that is continuous.
So when we come back, ECCB, you mentioned some of the things that you've been doing in terms of how you assist members in ensuring that they remain compliant. I guess you have, ECCB only deals with the banks, not with the credit unions. So you just indicate that to us. Also, we'll be discussing further. This will be our last segment. And so you'll do the close-up as well, but you'll also be discussing some of the, what is coming up next for NAMLOC, what is coming up next for St. Lucia to become increasingly compliant. When we come back, we continue our discussion for St. Lucia's national anti-money laundering legislation.
Listen, I am fed up. You're just asking for more information, more information, more information. What is that all about? You know me, sir. I do business all the time.
I'm sorry for the inconvenience, sir, but let me explain to you why we request additional information.
More information, manita.
So every year, $2 trillion is laundered through legitimate institutions like this bank.
What that have to do with me?
This laundered money is used to support criminal activity and terrorist activity, and also to finance weapons for mass destruction.
But what that have to do with me putting my money into my account?
Well, because of money laundering, our bank, your bank, is obligated to comply with the International Anti-Money Laundering Regulation.
What's that?
By performing customer due diligence. Essentially just knowing our customers a little better.
You know me.
Your banking patterns and transactions. It's a relationship, and if we fail to comply, the penalties will be severe. Not just for this bank, but for St. Lucia.
If we?
Yes.
I never realized that.
But what's good is that we have an oversight body called NAMLOC.
What's NAMLOC?
The National Anti-Money Laundering Committee. It monitors St. Lucia's compliance with international regulations. The aim is to nip money laundering at its source. You know the old saying, si la pani city wears.
La pani vole.
For further information, contact the Attorney General's Chambers at 468-3200 or visit the National Anti-Money Laundering SLU Facebook page. Welcome back. We're discussing St. Lucia's national anti-money laundering legislation. My tongue always gets tired when I say this. Juliana says it's so much easier every time. So, Levi, we're on to you. ECCB, you talked about financial exclusion. What are some of the key stakeholders in ensuring that persons are not excluded from the financial sector? What are some of the key stakeholders that ensure that that should not happen? Because it's easy for persons to say, I don't trust the banks, and you hear a lot of that because they feel they're not getting the returns that they want from their money. And like for me, I get $5 deducted every month, you know, and I don't see the requisite, but I still remain, but other persons will not stay. What are some of the stakeholders, and how do you get persons to remain part of the financial sector where you could continue your monitoring of their activities?
Okay. And most importantly, while having financial inclusion assists us with monitoring and towards the identification of risk, I think it's important to emphasize here the aspect of financial inclusion is really for the benefit of the citizens of St. Lucia. That being, it provides you, when you come into the formal financial system, it affords you the ability for your government and for the persons that you have placed in charge, that also being the ECCB, to protect you as a consumer. Because of our fiduciary responsibility, we ensure that whatever practices that they are implementing, it is to the benefit of our consumers at the end of the day. And so it is fundamental for us to understand this aspect as well. It goes beyond the monitoring and the identification of risk and implementation of controls. Now, when we speak about the stakeholders, it is quite widespread. We have, of course, the central bank, who of course has a responsibility for financial stability in St. Lucia and the currency union. We also have the government of St. Lucia, and if we want to say by extension, our monetary council across the ECCU. But we also have the financial institutions that operate in the space and the consumers themselves, because they too have a responsibility as to whether or not they want to participate within the formal financial sector and do so within a compliant manner. Because at the end of the day, when we speak of financial inclusion and we want it to be accessible and affordable for every person that walks the street, it is not for the bad actors. And as a result, this is the reason why we have bodies such as NAMLOC to ensure that the system works for the right persons and not the bad actors. As part of that journey, I know I've said a lot, the central bank has instituted certain initiatives, and we've done that in collaboration with some of our licensed financial institutions. And so one of that most recently was the introduction of a basic bank account with our financial institutions. And so what is a basic bank account? It is one that is free to open. It is one that every citizen can go in and walk into the bank and request once you have not had a previous account with a financial institution. So it is catered to the unbanked persons in our society. And most importantly, and what I think most persons are happy to hear, is that it only requires one form of ID. Yes. So I know we've gone through the laundry list of due diligence information, but for this particular product, that being a basic bank account, one form of identification is required, because we are trying to bring persons into the formal financial system so that we can better serve them, so that we can identify, allow them to develop transaction history, accumulate some level of wealth, so they can access other products and services within our financial system. The ECCB has also instituted its Office of Financial Conduct and Inclusion, and so there is ongoing discussion regarding the establishment of that account, body, not account. And so those initiatives and engagement with stakeholders have been ongoing. We would have recently launched this in St. Kitts and Nevis, and there will be further engagement with other ECCU members, which would include St. Lucia as well. We have also passed certain guidelines to our entities. So very recently, we would have developed and issued to our industry simplified due diligence standards. So Albina would have made mention as to what is simplified due diligence. And what we try to do as a regulatory body is to give our entities the guidance on how they can go about identifying the risk and thereby applying simplified due diligence measures. So quite a bit is going on, because we understand the challenge that is faced on the ground, and so we are trying to assist and serve the people of the region.
Now, I hear you on all of that, and that is admirable. That we still have an issue where you have entities such as sports groups, mothers and fathers groups, and it's very difficult to set up something like a group account or even a corporate where you have a few people coming together trying to probably increase the way that they do business by having a joint account. Is that going to be looked at to make it simpler as well? Because there's a laundry list of things that are always being asked for, including minutes, including everything else, and then the pushback is there. And sometimes it takes 3 months, 4 months, 6 months to actually have that happen. Change of signatures is a very difficult process as well. So I'm not sure if you want to take that.
Well, I think Levi will do a follow-up, but I just want to mention that the NGO legislation that we are proposing is going to be an important step in that whole process. Very nice. Because the NGO legislation, one of the hallmarks of that piece of legislation is to ensure that we have a register of whoever is in the landscape. So at any point in time, we know who is operating, and most importantly, we also know their risk profile. So once that is in place, that I think will make a significant step in terms of addressing some of the concerns that you have raised. And I'm sure Levi can add to that as well.
Yeah.
Most definitely. And I think PS hit the nail on the head, understanding the risk profile. And hence the reason we speak, when we speak about financial inclusion, coming into the formal financial sector, getting registered, all of these things tie in to identifying what is the risk that is posed. Simplified due diligence can only be applied where we have identified lower risk. And if you have been identified as lower risk, then you can benefit from the simplified due diligence. And so everything ties in. And this is why we are asking persons, come in to the financial system, ask the questions, provide the information to allow the entities to better assess and provide the services that you require.
I agree. Because data has been a problem in St. Lucia, in the region. People refuse to share their information, but there is value in sharing so that you have fewer issues. So that leads me now to Astrid. What should one do if they're aware of a professional or entity who should be registered but has not done so? That question almost sounds like you're asking persons to be, they call it Mako. But to be,
it might just, you're just looking out for a friend.
So look out for, what should one do?
Well, as I've mentioned before, it is an offense to be operating without being registered. So, and we all know ignorance of the law is not an excuse. There is a penalty for not being registered. So I would, if you are aware of that person, you should really
Advise
strongly
them.
encourage them to register. And the longer they continue to operate without being registered, the more likely it is that they will incur, they will be subject to the enforcement measures that are available in the Act. So that's all you would have to do. Just make the person aware. Maybe they're honestly not
ignorant of
aware.
it, yes.
Exactly. So, you know, I heard this on the television. Are you aware of that? And they can always call the FIA to get more information, to understand what the registration requirement is, and we'll be happy to guide them. Our team is always happy to guide them. So that is all that would need to be done. Just pass on the information and encourage that person to be registered, because it is a requirement.
I think once they hear what are the penalties, they'll come and register. Penalties are too stiff. So your question now, how do you balance the need for effective AML controls and the requirement to maintain the customer experience and business efficiency? Strike a balance. I know you spoke of how you make them feel very comfortable. Is there a balance that you're striking? Every day you have to do that?
No, we don't have a one-size-fits-all. That's where risk-based approach comes in.
Very good. Tell us about the risk-based approach.
Where you have to identify all of your risk. We're talking about customer due diligence. We identify our lower risk members, and then we identify our higher risk individuals. For the higher, so now you know where to expend your resources, where to allot your time. You would spend more time monitoring a high risk member than a lower risk member, especially using the example I gave about a salaried individual. Whereas with somebody who probably operates a mini-mart, mini-mart is highly cash intensive. You need to spend more time monitoring these accounts, requiring more verification documents, probably having them update their accounts more frequently, etc. So it's all about applying a risk-based approach to strike that balance.
Excellent. So you didn't realize when I was asking you to round up, that was your rounding off question, kind of?
Oh.
So PS is left up to you to, within the short time we have left, an hour has gone by very quickly.
Absolutely.
What is next? What's next for the NAMLOC committee? What's next for strengthening St. Lucia's anti-money laundering, counter-terrorism financing, proliferation financing? What is left for St. Lucia?
All right, so in terms of the next steps, I think the first thing I want to mention, as I would have indicated earlier, and Albina would have hinted at it, is that we're going into now a national risk assessment. So we want to get a snapshot of where the country is at in terms of the risk profile. That information will be very important for some of the partners that we have spoken about, the credit union, insurance, because when we do that national risk profile, it then enables them to then undertake their mitigation measures, to do their internal reviews, and do whatever is necessary to ensure that the sector is not high risk. First step. The second important thing that I want to mention is that we're getting ready for the 5th round mutual evaluation. 5th round is around the corner. So we did very good earlier under the 4th round, addressing the deficiencies. But under the 5th round, the assessors will be paying attention to our level of effectiveness as a country in terms of all of these legislative amendments that we would have done. So very intensive. The work for NAMLOC continues. It's an ongoing process. I must say that my team, and I have to say a public commendation to them, they are really committed to this process. And we wouldn't have been able to make the progress that we have made so far had it not been for them. So I also want to thank the private sector. It's a public-private sector partnership. And they have always been willing, when we've called them, to support us in this effort. And I want to say a thank you to them as well.
Excellent. And that brings us to the end of our discussion. So let me thank you all for sharing that information. I think it's important that the public always hears the work of institutions. And a section like the Attorney General's Chambers that deals with so many different issues.
Absolutely.
NAMLOC, you're working every single day, it looks like it's a separate job. But all of it is geared at ensuring St. Lucia is strengthened. Our policies are in place, we're compliant, we don't be blacklisted, grey listed anymore, because that in turn will force the country into a place that we don't want to go, make it more difficult to do business. And so, coming from the Productivity Council, it assists us in being more competitive, more productive as a country. Let me thank you. We've been discussing St. Lucia's national anti-money laundering legislation, and we thank our panel for sharing the information. And it's up to you now in the general public to consume it. Go on to the Attorney General's Chambers page, and there's a lot of information on NAMLOC and the other policies and legislation that have been put in place. Let me thank you, and let me thank my panel, and have a wonderful rest of your activities.